Meta case scenario. A struggling asset management company recently hired Meta, CFA, as Chief Operating Officer. Meta's first responsibility is to recommend to the board of directors how they can lower costs while still retaining the firm's client base and how to increase assets under management. Meta analyzes the firm, its clients' needs, and general market conditions before presenting her findings to the board of directors. At the presentation, she makes the following statements. Statement 1. If the company adopts the CFA's Institute Standard of Professional Conduct, the CFA Institute Research Objectivity Standards, and the CFA Institute Soft Dollar Standard and publicly discloses the company's compliance, we must be 100% compliant firm-wide. By complying with these standards, our business will grow since clients value the integrity these standards bring to firms that abide by them. Statement 2. The CFA Institute soft dollar standards are easy to adopt because they reflect the fiduciary duty we have to our clients, placing their interests first and foremost. It also allows us to purchase research with cash credit for the investment and administration departments, which will reduce our overhead costs. Meta also recommends they outsource the research function of the firm to stockbrokers who will supply all research. She states this will result in a substantial cost savings by reducing the firm's workforce and office space needs. In Exhibit 1 below, Meta presents to the board the database she has developed with regard to stockbroker selection. Continuing with her presentation, Meta states, if we adopt the soft dollar standards, we must provide a statement to existing and potential clients disclosing we use broker-provided research for all clients irrespective of whether client trades were directed to the broker providing the research and whether they involve principal basis trades. The statement needs to include the types of research received through proprietary or third-party research arrangements, the extent of use, and whether any affiliated broker is involved. And we must also provide a statement to our clients that any soft dollar arrangements with respect to that particular client account conforms to the CFA Institute soft dollar standards. I suggest we send the disclosure statement every 6 months. After the board presentation, Meta's firm decides to implement the soft dollar standards and select stockbroker B as its primary broker. Subsequently, Mr. Kim, a pension fund trustee who is a client of the asset management company, gives instructions that some brokerage transactions be directed to a new brokerage company. Meta recommends that the firm regularly evaluate the client-directed brokerage arrangements, including a list of stockbrokers, the potential for achieving the best execution, and the targeted percentage of transactions to selected brokers. Question 1. Meta's first statement is least likely correct with regard to which of the following CFA Institute standards? A. Soft dollar. B. Research objectivity. C. Professional conduct. The answer is A. A is correct because soft dollar standards are not required to be adopted on a firm-wide basis. Compliance can be specific to certain clients only. Soft dollar standards are not applicable to clients who make client-directed brokerage arrangements. Standard 5. Client-directed brokerage dictates that since brokerage is a client asset rather than an investment manager asset, the practice of client-directed brokerage does not violate any investment mandate per se. Question 2. Does Meta's second statement most likely reflect the principles of the CFA Institute soft dollar standards? A. Yes. B. No, with regard to fiduciary duty. C. No, with regard to purchase of research. The answer is C. C is correct because the fundamental principles of the CFA Institute soft dollar standards are based not only on fiduciary duty, but also on the principle that client brokerage cannot be spent on research not used in the investment decision-making process. For example, not for the general management or administration of the investment firm. Meta's description of fiduciary duty is consistent with the standards, but her comment on the purchase of research for use by administration is not consistent with the standards. Question 3. Based on Note 1 in Exhibit 1, in order to comply with CFA Institute soft dollar standards, the maximum percentage of stockbroker A's research allowed to be purchased with client brokerage is closest to A. 55%, B. 85%, C. 100%. The answer is B. B is correct because daily portfolio valuation 55% and economic statistical database 30% platforms are considered to be used in the investment decision-making process, whereas general accounting is a function to help in the running of the investment firm and hence not allowed to be paid for by client brokerage. A is incorrect because it only includes the daily valuation function, whereas the statistical database would also qualify. Question 4. Based on Exhibit 1 and assuming equal market impact cost, which stockbroker should the firm most likely select as their primary broker? The answer is B. B is correct because Standards 3, selection of brokers of the CFA Institute soft dollar standards, requires an investment manager to obtain best execution. Stockbroker B executes in one day at the same rate as stockbroker C, but stockbroker B offers a commission rebate that would lower the overall execution cost when compared with stockbroker C, thus lowering the cost for the client. Therefore, stockbroker B offers the best execution. Question 5. Does Meta's description of the required disclosure statement regarding soft dollar arrangements most likely meet the CFA Institute soft dollar standards? C is the answer. C is correct because Standard 6, disclosure of the CFA Institute's soft dollar standard, requires investment managers to prominently disclose in writing to their clients that additional information in accordance with the CFA Institute's soft dollar standards concerning the investment manager's soft dollar arrangements is available on request. The standard also requires that investment managers disclose their policies with respect to all soft dollar arrangements. The standard also requires the manager to provide a statement indicating compliance with soft dollar standard at minimum on an annual basis. Question 6. Do Meta's proposed evaluation procedures for client-directed brokerage most likely comply with recommended practices of the soft dollar standards? A. Yes. B. No with regard to stockbroker list. C. No with regard to target percentage. The answer is B. B is correct because while Meta's recommended evaluation process includes the list of stockbrokers, it fails to identify their trading skills as recommended by the soft dollar standards with regard to client-directed brokerage.